To Canada's economy, there's a short-term story and a long-term story. The short-term story we talk about every day: higher interest rates, cooling inflation, yes, but also weakening the economy, and we'll see how resilient Canada's economy can be. Over the longer term, Canada's place in the world is a constant source of conversation. Can we pick up the pace on productivity? Can we dig our way out of big deficits? And will our biggest investors, pension funds, back more homegrown businesses? Our next guest can share some C-suite perspective on all of that. Calin Rovinescu ran Air Canada for more than a decade, helping to lead a major turnaround for the carrier. He also serves on boards such as Scotiabank and the parent company of this network, BCE, and he joins us here in studio. It's nice to see you.
Hi, John. How are you?
I'm doing well, and we spoke in the spring, and you characterized the economy as resilient. When you look at the landscape right now, what's your view?
Still resilient. I mean, I think that even though we've seen an obvious slowing down of the economy, and we've seen, of course, the most recent stats that came out last week, I believe, on the most recent quarter, we see a reduction in economic activity, which signals that there will be a slowdown as we head into 2024. However, I think it's resilient. I think we'll still see a soft landing, in my view. I don't think we're going to be into some kind of a deep recessionary environment. All indicators are, of course, that the Fed and hopefully Bank of Canada equally will pause interest rate hikes. Inflation is, I think, they're looking at 3.1% or something like that. They want to be able to put their arms around it. And I think we're getting into that stage where enough of the interest rate hikes. So my sense is that while it's going to be tough for some businesses, some companies, the economy has been remarkably resilient. The employment rate has been resilient. Yes, it's gone up a bit. I think 5.8% is what we saw last week. But again, it is almost at historic lows here. So you're seeing an economy that is sort of trying to flex its muscles despite what the central banks are doing here. And you're going to have pockets of weakness. And you've seen the bank numbers. All the banks were taking additional reserves for loan losses and these provisions for next year.
Yeah.
That's a normal thing because many businesses will have some pain. But generally, my view is that this will be a soft landing.
And generally speaking, you're also an optimist on investing in Canada, and you even put your money where your mouth is on that. And we'll talk about that later. But there is a bigger, broader question around the story of investing in Canada. This is actually even playing out through the lens of our major pension funds and the desire to see more homegrown investing there. Where do you weigh in on that dialogue?
I've read a lot about it recently, the various points of view that have been put forward. Letco Brasso, Montreal-based large investment manager, has been very vocal about its opinion on the need for more investment by the pension funds in Canada. I've also seen some, recent commentary from a couple of the pension fund CEOs, one in particular who wrote that they were against that idea. I am personally firmly on the Letco Brasso side of this debate, which means that we should be encouraging our pension funds to invest more in Canada. When we look at the public companies, the number, the statistic is something like just over 3% or just under 4% of their assets are invested, on average, are invested in Canadian public equities. And that is a low number. Yes, Canadian equity markets probably represent 3% of global equities. I get that. But if Canadian institutions don't support Canadian companies, it becomes this sort of self-fulfilling prophecy of hollowing out of corporate Canada, the elimination of head offices here, the elimination of growth, the elimination of investment. It becomes a self-fulfilling prophecy if we don't have Canadian institutions support Canadian companies. So I think the idea is let's see what others are doing, the relative percentage in the United States, U.S. pension funds supporting U.S. companies, and so on and so forth. Because, taken to the extreme, you could make the case that if the entire world invested according to the percentages, then we should get a lot of investment into Canada because we're 3%, get it from all over the world, but it doesn't work like that.
You use that word relative, and here on BNN Bloomberg, people have ideas about investing in all sorts of places, and sometimes pension funds will say, well, we're looking all over the world because we're looking for returns for our stakeholders. When it comes to making Canada a more attractive place to invest, What more can we be thinking about?
You know, one of the problems in Canada is that we have this natural tendency from a government perspective to insert spanners in the works when companies are ready to invest. I saw it in my industry, you know, the airline industry. You mentioned I'm on the board of BCE. I see it in that industry with what's going on with the CRTC right now. I'm on the board of a bank. I see it with this, you know, bank one-time tax that's been imposed by the government. So, you know, I start off with the premise that businesses typically will have some short-term pain for long-term gain. We see businesses doing layoffs in difficult times, divesting of assets that they can no longer hold on to in difficult times. They'll make a short-term pain decision for long-term gain. Governments, unfortunately, because they're only elected for 4 years at a time, are in the business of short-term gain for long-term pain. And that actually, you know, when you think of it, is a mismatch, because that prevents governments from establishing policies for the long haul that make sense. So we look at the telecom sector, you know, CRTC here, you know, imposing on the existing telecom operators like Bell and TELUS and others. They've made colossal investments in fiber to the home. That now is a form of expropriation to hand it over to the resellers at a price to be determined by the CRTC. You know, that would make it tough to think about investing in the future. And I know that the CEO of BCE has made it clear that that may restrict their capital investments in the future. Case of the banks, you know, we've seen this 15% one-time tax, this COVID recovery dividend. Likewise, you know, it was a bit of a opportunistic reaction to the COVID environment, how much governments had going out the door during COVID. You know, banks are, this is going to be a tough time, as we just finished establishing, over the next little while with, you know, credit losses and so on. One-time tax like that imposed. Similar things going on in the airline industry in terms of the whole regulatory environment. You know, now looking at establishing penalties in addition to compensation, regardless of the cause of it, whether it's, you know, weather delays. It's kind of, you know, characterize it as the equivalent of paying a penalty for a rain delay in a baseball game, sort of a thing. So, you know, one of the things that I would like to see are policies that can sustain themselves over time, that have the benefit to say we want to have long-term investment by corporations. We like free enterprise. Free enterprise generates a lot of jobs. Free enterprise creates economic activity. You know, Canada now has got one of the lowest GDPs per capita of all of the G7 countries. That's disturbing, right? It's disturbing. And I saw a statistic the other day that, you know, we used to be at something like 90% of the US on a per capita basis on GDP. We're now at 70% on a per capita basis. That means, you know, sort of we've seen the gradual reduction. So we need to do something to take away some of these barriers to, you know, investing more in Canada.
Businesses are navigating that, but we are also watching things unfold with the Israel-Hamas war. You previously served as the chancellor at the University of Ottawa. You wrote an opinion piece highlighting your concerns over anti-Semitism on university campuses. What brought that about?
I was very uncomfortable with what I was seeing in the U.S. and in Canada, in terms of this was, you know, gradually, ever since the terrorist attacks of October 7th, it was, you know, ramping up. Israel obviously had its response. And my view was we can have all the debate we want to have. We can debate whether or not there should be a two-state solution. We can debate whether or not we like Netanyahu. We can debate whether or not this was an appropriate response. What is proportionality? But we cannot have the kind of hate that we've seen on campuses, intimidation, and then of course it's spilled from campuses to businesses being attacked. You know, this has not been, you know, sort of peaceful dialogue in many respects, and I felt it important to speak out. And in fact, you know, I look around and I don't know that enough business leaders and university leaders have done enough to speak out on the topic. And of course, it's not just in relation to anti-Semitism. It would be if there was anything similar targeting any religious or ethnic group. This has been unusual in my experience. I've not seen it, you know, in my whatever 45 years of experience in the business world. I've never seen anything like this. And I think it was important to speak out on the topic.
Well, it's a